Hey, it's Clay at claytrader.com. Let's talk some day trader tips, and in particular, how I handle missed goals. And I want to share this with you by sharing some of my results with you. That way I'm avoiding talking in theory, and I can just show you and share with you my personal emotions, my personal feelings, and then you can see some real life data that corresponds with this. And because it's something where it's going to happen to you, right? You have to have some sort of baseline with not only trading, but really anything in life, whether it's I want to, run a mile in a certain amount of time. I want to lose a certain amount of weight, right? You have to have some sort of metric that's going to help hold you accountable for whatever your goals are, whatever task you're trying to accomplish. And in trading, it's a very strange environment. It's a very sometimes counterintuitive environment, and you need to be very careful with it. And, that's where I want to, just if I do my job right here, illustrate through my, just recent results that happen, what you need to do, what sort of things you need to be aware of. And to start everything off, it starts with just, hey, you know what? Be honest with yourself. There's no shame in admitting that you screwed up. There's no shame in admitting, something that doesn't really flatter your ego. And it's not fun to do, but it's not anything you should be ashamed of because it's actually very helpful. So that's where this all needs to start off on, because especially when it comes to goals and trading, things can get sketchy very quickly. So just to kind of set up the context here a little bit more. So let's so here are my results from November here, and came out to $3,743.05 there. And to add in a bit more context, and again, this is broadly speaking, but I like to try to grow my account 10%. Whatever my account value is, try to add on 10% to that. And I call that pretty good. If you can accomplish 10% every month, that's 120% per year. And 120% per year, that's pretty good, right? That is a situation where I think hedge fund managers would probably shove their mothers off cliffs in order to get those sorts of returns. But again, broadly speaking, I'm aiming for right around 10% per month. And I also want to value my time and keep an eye on my time. So, and for those of you that have watched past videos, you know where I'm headed with this, but I like to try to keep an eye on a per hour rate, and I'll show you that here. But in this situation, to just, not that you don't know how to do this calculation, but to just keep us all on the same page. So my starting amount right there was $44,939, but made $37,403. So let's just quickly go over that calculation here. So made 37,43.05, and then I want to divide that by the amount that I started off with, which again right there is that number. So divide that by 44,939.81. And then you can, if you want, multiply that by 100 to convert it to a percentage. So I made 8.3% return on my money this month, which was not the 10%, right? So it was a missed goal, and it's not a good feeling. Now, in all actuality, 8% in 1 month, that's still a respectable amount of money when you consider, if you put your money in like a bank account or a CD or something like that. However, with trading, the percentages can and should be bigger, right? Especially when you factor in the risk that's being taken. For example, if you're growing your money like 0.5% every month, and this, if you're a beginner, it's a much different situation. But just in general, if you're like, yeah, I got a great strategy, yeah, I have things figured out, and I'm growing my money on average, and I'm 0.5%. It's like, okay, well, that's great. Or let's just say 1%. Okay, that's good. You're growing your money 1%, but relative to the risk, that 1% is a little deceiving. That's why I'm trying to get up around 10%. But even at 8%, 8% times, 12, that's 96%. So even at 8%, I'm still potentially doubling my money every year, which is pretty crazy, right? So, like I said, that's where the 8%, it's not like it's terrible, but it's not the 10%. But, and don't worry, the lesson here is not, okay, so Clay, you handle your losses by rationalizing you're not. And touche, if you're thinking that, fair point. But no, that's not actually where I'm headed with this. Where I'm headed with this is back to step one, right? Be honest. How did you do, right? How did the in my situation, the 8% come about? Did it come about by me, doing a bunch of, crazy bad things? Or how exactly was the 8% generated? And I can honestly say that right here, maybe that should have been a couple $100 less. But even if that was the case and that was a couple $100 less on that day, I'm still not hitting my goal. So what does that tell me? Well, that tells me, and this is what you need to consider with missed goals is, you know what? That's just the nature of the market. The markets make no guarantees. The market does not say, okay, so you have a valid strategy. Okay, well, you're always going to accomplish your goal. Now, you could argue, well, no, Clay, a valid strategy is something that accomplishes your goal. And that's true to an extent, but okay, so you're telling me that unless, somebody's hitting 40%, 50% every single month, then okay, that's not a valid strategy, right? That gets a little murky to use that line of logic. My point here is that if you have a valid strategy, and just generally speaking, valid strategy being something where you can manage risk, right? You're not always going to be winning. You're going to have losing trades. You're going to have losing days, but overall, you're managing risk. And assuming that's the premise, you just need to understand that whatever your goal is sometimes you're just not going to hit it because the markets don't offer guarantees, and you just got to take it at it. It is what it is, and you just got to say, you know what? Be proud of yourself, and I am proud of myself. I'm proud of myself in the sense of, for the most part, like I said, yeah, that day could have been a bit better, but for the most part, I did just fine. I traded the system, I traded my strategy, and it just didn't quite give me the 10%. Close at, what did I say, 8.4 was it? 8.3, close at 8.3, but it just didn't quite hit it. Now, this is where things get very, very sketchy, though, and I've been here, so I don't sit here and try to talk about it from a high perch of, oh, no, this is coming from personal experience. You also need to be honest with yourself of, let's just say I was at 12%, and I look at my results and you're like, well, that day, yeah, maybe my position size got a little out of control. Sure, it worked out, but was I really following my system? Was I really following the rules of my strategy? Yeah, probably not. So from a habit perspective, from a psychology standpoint, those days, I would argue, and again, this is coming from experience too, are actually detrimental if you're not going to be honest with yourself. If you're going to look at that and be like, oh yeah, no, I did great, and look at that, I beat my goal. Okay, all right, but you're actually lying to yourself. Sure, you beat your goal. Sure, you mathematically have more money. But what you're also doing is you're reinforcing a bad habit that's eventually going to bite you. And when those bad habits bite, once more, not theory, from experience, they can bite very hard. And I'm sure many of you that are watching this, in fact, if you're willing, leave a comment down below that explains exactly what I'm talking about, where, yeah, you can be doing something that works, but then just the one time or two times, it can bite and you can lose out on days, weeks, maybe even months worth of gains if you're not careful. Another thing that you need to be very careful with is to have a goal. It's very easy, and this is what I've learned to do. I did not pull up this chart here on the last day of the month or the last couple of days and be like, okay, how close am I to 10%? Because what you're then setting yourself up to do is say, okay, well, I'm still 2% away. Okay, so and you can do the math. How much is 2%? Okay, now I need to make this amount over the next 2 days, 3 days, whatever it is. And why are you doing that? Are you doing it for the sake of your strategy? Are you doing it because in the spirit of, I need to honor the rules, I need to honor just the system? Or are you doing it in the spirit of, well, I need to hit my goal? Now that's tricky, right? Because it sounds like, well, that's ambition. You want to hit the goal. You want to accomplish your goals. I'm an ambitious person. I want to accomplish my goals. And that's so true in so many areas of life. But with trading, you're setting yourself up for the risk of, yeah, I got to just make one more trade in the spirit of wanting to accomplish that goal. Yeah, that's close enough, and you make the trade, and then all of a sudden you start to force trades that don't actually exist. So you start to not really follow your strategy because, well, your strategy is saying nothing really fits the criteria for your strategy, but your goal is saying, yeah, but you still got to make another 2%. So you got to make an exception to the strategy. No, you don't want to make an exception to your strategy for the sake of some sort of goal. So that's what I mean by, you know what, if you can say in your heart of hearts that you follow the system, you followed the strategy, you did what it did, and you just didn't quite hit your goals, hey, you know what, that's okay. That happens because the market is random at the core, and it's never going to make you any sort of guarantees. And you have to also understand and recognize that some months you're going to follow this strategy. You're going to do just fine. And it's going to be like, wow, I'm at 12%, 13%. Oh, all right. Nice. And again, you can look at that and be like, and I wasn't doing it. The market decided to reward me more. So yes, if you are managing risk, if you are truly focused on the whole risk control side of things, then the market is going to punish you sometimes, right? It punished me here in the sense of, yeah, Clay, you followed your rules. You did a great job of following your system, but yeah, sorry, we're not going to give you the 10%. But the market is also fair in the sense of it will at times reward you where it's going to say, hey, Clay, you followed your rules, you did with it, and here's 12%, here's 13%, right? Here's some sort of percentage, or as far as your goal, some sort of number relative to your goal. So you got to handle missed goals by just assessing, well, why did you miss them? And if you missed them just because, sometimes the market's not going to give them, then that's fine. So in other words, I'm not going to be going out there changing my strategy. I'm not going to go out there and start to, I guess I need to revamp some rules. I need to change some things around. No, you don't. Now, to be fair, and this is why trading's tricky, maybe sometimes you do, right? Maybe sometimes you're like, okay, yeah, this is a train wreck, and that's very common, obviously, when you're getting started and new, but you don't want to jump the gun too quick and be like, oh, geez, I didn't hit my goals, therefore something must be wrong with me. Something must be wrong with my strategy. Could be true, but it might not be true. And that's where your experience and stuff like that comes from. But on the flip side, you don't want to lie to yourself and be like, man, I crushed my goals. I really beat my goals. Yeah, but if you beat them because you're doing a bunch of reckless things that happen to work out, it's only a matter of time before they don't work out and things can switch around a whole lot more. So just please understand, the markets are random. They're not going to always reward you. But they are fair, and they will eventually reward you in bigger ways. But you got to just stick with your system, stick with your strategy, and realize that sometimes your goal is just not going to be hit. And really, at the end of the day, goals are pretty arbitrary. Like, where does my 10% actually come from? Just because it's 10%, that's kind of just a common mind. Like if I said, my goal is 10.3%, you'd be like, wait, what? If I was like, my goal is 9.1%, you'd be like, wait, what? Even if I said my goal is 7%, you'd be like, 7%? That seems kind of random. But when I say 10, right? Like, okay, I get 10. So there is that psychology of round numbers going on. But point here being is even goals are relatively arbitrary. So you handle missed goals by just truly being honest and understanding that, sometimes missed goals, it is what it is. It's annoying because I am an ambitious person. I'm assuming you're an ambitious, and it's very easy to fall in the pitfall of I'm a failure. I really got to up my game next month, or I got to play catch up now, or I got to, maybe something's wrong. No, it is what it is. Sometimes the markets are random, and the best way to handle a missed goal is just to keep doing what you were doing that caused the missed goal, which sounds totally backwards, right? Wait, why would you keep doing something that caused you to miss the goal that you want? But that's the tricky part of trading, right? Because trading is not like any other things. I mean, if you're eating, well, I didn't hit my goal, but I've been eating a bunch of Twinkies, so I'm going to keep eating Twinkies. Okay, well, that doesn't really make sense, but that's because the body's not random, right? If you feed Twinkies to the body's going to be like, okay, I'm just going to keep gaining weight then. But the markets are not like human being science where it's, calories in versus calories out. The markets, there's a lot going on. So just keep that in mind. You handle it by keep doing what you were doing, even if what you were doing caused you to miss the goal, because within the general kind of the larger sum of things, the market's also going to at times give you more than what you thought you were. So hopefully this helps. Hopefully this makes sense. I know I'm kind of repeating myself now because I want to really make sure that I'm explaining it the best way possible, because it does sound backwards. But, at times you're just not going to hit your goals. That doesn't mean you didn't do anything right, or that doesn't mean you did a bunch of things wrong. It's just the nature of the beast. And also remember, just because maybe you hit your goals or superseded your goals, that doesn't actually mean you had a good month from a habit perspective. So always be honest with yourself, run those self audits. But the last thing I would want for you to do is for you to miss out on a goal just because the markets are random, yet you blame yourself or you blame your strategy and you start changing things around, and then you start creating headaches for yourself because you didn't really need to change your strategy in the first place. But I don't know. Did I confuse you? Do you understand what I mean? Let me know in the comment section below, because this is kind of a challenging topic to talk about, because the markets, like I said, they're just not like many other areas of life. But if you enjoyed the video, hit that like button, leave a comment below, and any sort of other suggestions, I love to hear from you as viewers. So let me know in the comment section. But again, get out there and realize that it's not the end of the world if you miss the goal, especially if you were behaving in a way that you should behave. And if you didn't hit it, that's okay. There's going to be new months ahead or new weeks ahead or whatever this metric is that you're using that will eventually reward you for following your system, your strategy, and behaving wisely. So hopefully this helps. Hit that like button, leave a comment down below. First off, thanks so much for watching the entire video. Real quick, before you go, I want to invite you to a live webinar, web class, training, workshop, online event, whatever you want to call it, but it will be me live revealing to you what I've discovered that has allowed me to transform myself from being an employee to being my own boss, including how I had only one losing day out of 73 days in total. I'm going to cover 3 keys that have helped me unlock profitable consistency within the markets. The first key is super weird, but in a productive type of way. The second key is super awesome because it quite literally is wired into our DNA as humans, making it very easy to use. But in a cruel way, this becomes a pitfall for many traders. I'll explain it all though, including how to avoid the pitfall that it creates for some. And yeah, the third key, when you hear it, sounds way too good to be true, but it's not, and I'll show you how it all works. Then at the end, I open it up for a question and answer session that is, again, totally live. Even if you can't make the live session, please still sign up as it will be recorded, and you can go back and watch the replay that I will send you. Click the image on the screen or click the link down in the description box so you can get the date and time and claim your spot, which I should note is limited due to the fact that this truly is a live event. If you have any questions, let me know. If not, I'll be seeing you soon.